Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, June 27th here. We got a few economic news to go over. Like every Thursday, we get the weekly jobless claims. So last week we had 216,000 people applied for unemployment, the data showed. It was revised up 1,000 to 217. That data last week's was a sample week, so it was an important piece of data primarily because that's going to be used as part of the calculations for the job numbers coming next week when the Bureau of Labor Statistics release their job numbers. So forecast for this week was supposed to be 216,000. It came in about 11,000 higher, or 10,000 with the revision at 227,000. So still a low number here, but obviously it showed an uptick here. We'll have to obviously we always keep an eye on this to make sure if it's going to continue upticking, which could lead us into a recession, or if it kind of maintains this level here. Now, here's an important one here. We got the final revision of GDP. So this will be the final revision, and as you can see, it was 3.1 across the board. So the last revision was at 3.1%. Forecast called for the same, and it came in at the same at 3.1% here. Now, it'll be interesting to see what Q2 provides, because obviously we've had the discussions with China, and we had the threats of tariffs in the first quarter. So we had a lot of inventory buildup. Going into the second quarter, that's when we kind of had our detente with the talks between U.S. and China, and a lot of things have slowed down since then. So we'll have to kind of wait and see, how much of an impact that is on GDP that will play. So we'll get that probably later in July here, but it'll definitely be interesting to see what happens. We'll get that first look at it, and then the final colors come in September. And then last but not least, we got pending home sales, which is obviously a good indicator for existing home sales, as these are point of contract signed here. Now, month of April was down. It wasn't a very good month, obviously. We were down 1.5%. However, in May, it kind of rebounded a little bit, and it was up 1.1%. Now, year over year on this is actually in April is down 2%. And it improved to being down 0.7%. So we got a little bit of a rebound there and had some improvement from this is year over year. So let's go ahead and jump over to the headline news. Stock market is up so far this morning, but it did start off the morning kind of mixed. We had some conflicting reports on the state of U.S. and China talks. There was a report out of one of the Chinese papers saying that looked like the deal is going to be all done. Then the Wall Street Journal came out with a report saying that President Jinping is going to be sending over a kind of a to-do list, so to speak, or a demands list before they can continue talks. And part of it, of course, was removing tariffs, allow U.S. technology to do business with Hawaii, and a few other items here. So those were kind of some important tasks, and they were kind of having doubts if that could be if that would if U.S. obliged with those type of demands or not. So this is a report that came out of the Wall Street Journal and kind of conflicted with what was being said, and there's some doubts that that could all take place if that is to be true. Now, also, Boeing is kind of pulling back on the Boeing stock is kind of hurting the stock market primarily because there's another design flaw which can also delay its it has to do with the computer systems. So that could delay their 737 MAX, as you may recall. Reports have been there a lot of around the world. Those planes have been grounded until they get this resolved after those two air crashes within the last year or two. So let's kind of jump ahead, see how this is affecting the bond market. The bond market is doing pretty well. We're actually up about 14 basis points. We're approaching the ceiling resistance again to try to put a little more pressure on it. So we're up 16 basis points. What that means is mortgage rates improved today after we had a kind of a down day yesterday. So we got a little bit more room until we hit that next ceiling resistance. And as you can see, this 25-day moving average is moving up, continuing to rise up. So again, at some point, we'll get a little sandwich here and have to make one decision or another. Either go up or down, but for the time being, we're kind of in this range here, and again, approaching that ceiling of resistance again. Here's the yields. Yields are we closed above yesterday, that floor, which was the ceiling resistance again, which for a long time was a pretty strong, relatively strong one. There was a double layer here, a Fibonacci layer. Now it's breaking below it. We're down to about 2.02 in the U.S. yield, Treasury yields. and putting less pressure on mortgage-backed securities here, which allows for improvement in our interest rates here. All right, folks, that's pretty much the wrap on it, and I hope you guys enjoy the rest of your day. We'll catch you guys tomorrow. Thanks so much for watching. Bye-bye.